Hey, good morning, everybody. Welcome back. I just got home from work doing a quick video talking about fuel cell. And so yesterday, I had talked about fuel cell. Fuel cell basically fell through its previous area of support. So as you can see, just by looking at the chart, you should be able to see on multiple days where fuel cell basically was holding below 23s. It finally broke through 23s. It retested on 23s, and you can see it again right here where the stock tested 23s, and then of course the market closed. Now, when you typically see, I shouldn't say typically, but where you see the market start to be weak, you start to see volume come in, because you can look on this particular date. As you can see, the average volume is 28 million, and you see a 25 million day. The stock gaps through. On gap through days, you typically want to be more weary. Learn from my experience. I made the mistake of getting a little bit long here. I bought about 75 shares, thinking we were gonna perhaps test 23s and look for a bounce. And of course, we didn't get a bounce. We did see a little bit of a retracement back up, and then what happened? The market quickly sold off. And so that should let you know, okay, if I see my stock do this and I'm already long, you could say, okay, I'm going to get out. But again, you don't know where you're going to end for the day. And so typically, if you're swing trading, if you're swinging for the week, if you're swinging for the month, etc., however long in your mind you're saying to yourself, okay, I like where this stock is positioned. I've got a good solid base. I'm going to start accumulating shares within this price range. And so when you notice that your stock breaches through an area of support, the very first thing you want to do is pay attention to your next area of support. And so you'll see that right here at about $20, where you can see the stock over here gap through to 20s, but it couldn't hold. And then you see a retest right here of 20, another retest, which is a solid retest, where it literally came all the way back down to $20. And again, and then finally the stock traded higher. Now there was an intraday push during the daytime where, and what did it push right back to? Where you can see where basically the candle, which is where the candle opened, right? You can see that right here on the left, you'll see the O standing for open. And so we already gapped through an area of support, $23. Then the very next day, you gap down again, and you gap down through the next area of support. And of course, we bounced off of 18s. I think somebody in my last video asked me if it was 1950 or something. And as you can see, I said in my reply to that person, I said, no, it's 18. And of course, as you can see, the stock has basically bounced it pre-market, showing currently that the stock is basically gapping back up. And so how would you know, right? So if you were looking to get into fuel cell, you don't know if the stock is going to gap up. Now, of course, fuel cell did have a really hard pullback of about 30%. Right? You can see that here, look like about 36, almost 37% from the high of February 10th. And so you don't know where fuel cell is going to go. And of course, interestingly, as you can see by where the stock is currently indicating where it's going to open, it's indicating that it's gapping up where? To what is now considered our resistance, right? So that little area, $20, is now becoming our resistance, and our support is 18. Your next area of support would be down here at 14. Now, of course, with stocks like this, is a very speculative stock. This isn't, you couldn't look at fuel cell and be like, okay, they're going to come out with this deal, their projected earnings are, etc. They're getting into this type of business and this is what they're projecting. For the most part, this company, like Bitcoin, is a highly speculative asset. And you can tell that just by looking at the chart, where you can see earnings per share. This company hasn't made anything, right? This company has no earnings per share. It's always operating in the red, as you can see. And then even when it does, it reports always in the negative. And then even to the point where the stock did a reverse split, right? So for every 12, they gave you 1, right? As you can see, it's a 1 for 12 split, indicating that the stock basically became a penny stock. As you can see, at one point, it was 27 cents a share, and this is basically a volume pump and dump. which is why you want to be very careful. These are typically the stocks that are, right, because it's in the EV space, it's a green technology, etc. And that's why people are looking at it, because Joe Biden, of course, pumped green technology and EVs. And so it's not because this company is going to be making money. It's just, it's speculative. It's in the area. It's basically in the industry, and of course the market is speculating. And so as a result of being a highly speculative asset, right, because you are buying a company, you want to be very careful that in these instances you're not left holding the bag, as they say, right? People who are basically chasing it up here at 28 and change are basically either going to be averaging down like me. I'll be averaging down from where I'm long. I'm long at like 22.50 or something like that. I've got like 130 shares or something. And so I might have to get out at 20 and just eat the loss, because I don't know where this stock is going to go. I can't predict where it's going to go. I can't think and say, okay, well, this is a great company, you know, we're just experiencing a pullback and the stock is going to trade higher. There's no news on this stock, in essence. Like, there's no earnings for this stock. It's not a company that makes money. It's a speculative asset, just like Bitcoin. Bitcoin doesn't make money. It has a price tag, right? Just like Fuel Cell has a price tag to it, but it has no value. Fuel Cell has no value, right? Or I should say it does, but it probably gorges. It's probably a company that gorges on debt, which is what they refer to as a zombie company. Which is why the stock, when you look back at the chart, which is why the chart looks like this, right? If we look at the chart on the monthly or on the weekly, right, you can see what the chart looks like. So it's multiple areas of pump and dump, pump and dump, pump and dump, pump and dump, right? Over and over and over again, right? This company's been around since the 90s, and it basically hasn't done anything. They pump it and then it gets dumped, right? And then it has multiple splits. So this is basically a zombie company. It doesn't make any money. And so I just wanted to show why was it that Fuel Cell had a bit of a pullback. You should be able to see that right here, right? So often you should look back to see, where did the stock pull back the last time, right? Why was it that Fuel Cell halted basically around here at about that $18? Because it did so right here. You should be able to see that right here. And so what we might experience, what was the trend the last time the stock did this? You can see it right here. Right, so there was a little window right here, right, where the stock pulled. It did a little bit of a bounce, and then a retracement, and then finally another gap through another gap down through supports. You see it try to retest once, twice, and then of course the stock begins to sell off, because again, like I've said, this company doesn't make any money, right? As you can see, that their earnings per share always in the negative. This company is always losing money. It's a zombie company. And so this is typically why these are stocks that you don't want to chase, right? So you would want to be in here. Another example is, like, for example, ZOM, right? You look back at ZOM, same thing, right? So this is another zombie company from 2017, and it basically, as you can see, this company has no earnings. It's another zombie company. And so you'll find a lot of these on the stock exchange. So you have to be careful. It's different than a SPAC, right? So SPAC at the very least is either, you know, merging with another new company, or it's a company that's existed and of course is coming into the market via special acquisition. But even still, you still have to be careful, which is typically why I like to lean with stocks that have been around for some time, that have growth. You can see that the stock is either earning money. You can see that they're either doing better in terms of their earnings, or they're not. They might experience pullbacks. They might be rotational stocks, right? They might be cyclical stocks, which is why you're seeing more people now rotating out of tech, and they're rotating into like dividend stocks, like or commodities like XOM, or into banking, right? So before it was into tech, into, like, you know, Chewy, into Chegg, Microsoft, etc., right? These different companies, and then now people are starting to rotate into other stocks, and so you have to rotate as well. But you'll always see these types of, they're very typically very speculative. Another example would be, like, I think EasyGo. EasyGo, I think, is another one, or this might be a new stock. Actually, this is on the daily, right? Let's open this up here. Right, and so you can see people were chasing it all the way up here at 19, and then immediately what happens, right? Basically, the floor gets pulled out from under them. The liquidity dries up. As you can see, on the first day it was 6 million, another 6 million, then 1 million, then 700K, then 2 million, then 500K, then 250K. You see the liquidity starts to dry up. These are just basically pump and dumps. They get pumped into the either pre-market, or they get pumped into like an IPO, and then the stock just falls out of bed, as they say. So you always want to be careful when you're playing these things, or when you hear someone that is basically pumping these things, is because typically what happens is what I just said. You'll see a lot of liquidity, and then the liquidity just disappears because these companies don't do anything, right? They're just zombie companies, right? They don't earn anything. They maybe in the future, but for now they're not doing anything. So you always want to be very careful. It's typically why overwhelmingly most of the plays that I get into are typically stocks that have been around for a long time. Those are the ones that I know where there will always be liquidity. The only thing that can happen in stocks like this is that you could see something like this, and then you basically are hoping that the stock is going to go back up, because the only thing that is going to drive stocks like this higher is more liquidity. And if the liquidity dries up, especially in this play, I mean, this stock was $2 back in November, right? Is this stock making money hand over fist, right? This is company making money hand over fist out of nowhere so that it should be valued at $28? Of course not. Is there a reason for the stock to be even $20, right? To be 10 times where it was, where it basically sat. It was a penny stock, right? This was a penny stock back in the end of 2019, right? So obviously the people who saw what Joe Biden was interested in, they got in very early, right? They got in very early, and then of course it starts to make its way around the water cooler, as they say, until you hear about it on YouTube, or you hear about it on the Reddit, or you hear about it on Twitter. You hear about it, like I said, you hear about YouTube or from someone, your favorite YouTuber, etc., and you end up providing the liquidity for people to get out, right? Because these people have tens of thousands or maybe even millions of shares. And so as they keep pumping it up, they keep selling it to you, right? They keep selling out to you until what happens? The buying dries up, and then stock falls out of bed. Be very careful the stocks that you get into. This is typically how many people end up losing basically their whole portfolio, their whole, they end up blowing up their account, because these stocks have no value. They're highly speculative, just like Bitcoin. Bitcoin, while it may have a very high price tag, has no value because it doesn't do anything, right? Cryptocurrencies can be created out of anywhere, right? There's nothing special about Bitcoin outside of what Bitcoin does. Every single other cryptocurrency can do. And so just like the dollar itself basically has no value because it can just be printed, right? There's no scarcity in the dollar if you can just keep on printing the dollar, like what the US is doing, right? And so it's the same thing with Bitcoin or with crypto. Anybody can make a crypto, right? The Doji coin is an example, right? The dog coin, whatever it was that Elon Musk was talking about, is a perfect example of someone who just made it as a joke, as a meme, and people are adding a price tag to a meme coin that has no value. It doesn't do anything, just like Bitcoin, just like fuel cell. Fuel cell doesn't do anything. It doesn't provide a service, right? It's not really out there making money so that you can look at it, you can sit there and look at the books and be like, okay, this company is worth X amount of dollars. The market is undervaluing it, right? I just want to talk about that. Getting ready for the market to open about 8:30. Going to do a little bit of reading, and I'll catch you in the next video. Thanks for watching. If this is your first time here, be sure, of course, to like, comment, and subscribe. And I'll check you out next time.